hotel, looking for autographs, looking for
Mhm.
tips, right?
We're recording here at 2 p.m. So anything that happens after 2 p.m., we will not comment on today.
Yeah. Okay. Well, let's get right into it.
Mhm.
What's been going on this week?
Yeah, well, we had obviously international leaders of the world meeting this week in hopes that we would get a resolution to what's happening in Russia, Ukraine. That continues to be a big part of what is happening in the markets as well. So they did meet. They did talk about further sanctions. I'm really not sure how many more sanctions you can put on them at this point.
Yeah. Yeah.
I think one of the things that probably hurts them the most is they can't access some of the reserves because they don't have all of their reserves in their country.
Mhm.
So I think that one probably hurts quite a bit. We saw the Russian market open this week, like we talked about a little bit, and so that they're trying to, I guess, kind of get price discovery to happen again to see where these companies really are trading.
Mhm.
I think some of that has to do with both China and India have been in talks with potentially buying some of those assets, and so I think you're looking a little bit at trying to get some price discovery, and so that's happened, but no real resolution, and so we've been in chop markets all week again.
Yeah. Okay. Anything else that grabs your attention this week?
So those were the biggest things that grabbed the attention this week. I mean, we also, I know we haven't talked about too much, but the crypto conference that we attended last year is going on this week, and so we've dipped in and out of some of those events, but a lot of it was talking about NFTs. And so I'll comment on a little bit when we do the slide portion to this, but a lot of attention seems to be around tokenization, and smart contracts, and it's interesting to see how it's evolved. This is the third year that I've attended it, and I mentioned to you earlier this week, the first year was all about Bitcoin and what it meant and what kind of Bitcoin and blockchain was. Last year was much more diverse on altcoins, ETH, a lot of kind of different integration systems. And this year is really focused on tokenization, NFTs, and some super interesting things coming out of that, which hopefully we can give an update on next week once we've gone through all the sessions. So I'd say that took my attention from what's interesting going on in the world as well.
Yeah, definitely. Definitely, like you mentioned, the big change from year to year, right? What's being focused on. And it's at the beginning, right? Bitcoin was just considered the cryptocurrency, right? And now it's not even being really viewed as a currency at all anymore, right? And everything seems to be turning more towards the Web3 kind of overarching term, right? Versus anything specific like that. So, very interesting. Okay, so what in the choppy market, what'd you get up to in the portfolios this week?
So more of the same, not too much, because we've been kind of in this chop. It's still, if I've been doing anything, it's been selling a little bit of short dated bonds and adding to longer dated. So small kind of around the edges, those types of things. I've had a lot of conversations this week with clients just about interest rates and bonds, because I think that plays a major part in what's going to happen here over the next 3 to 6 months. And so a lot of time and attention has been going towards, well, what are the central banks doing versus what's the market saying? And then I've been trying to look at it and say, is there anything else worth looking at? And so, we subscribe to Keith McCullough and Hedgeye and their process, and a few other places. And the bigger money is looking at saying, how do we make money on the short side still? If we look at his list, for example, he has something like 40 shorts and a handful of longs, maybe 2 or 3. And so it's an interesting view at where we are in the cycle. As a result of that, I'm not overly trading. I'm waiting. I'm still adding to the core holdings like gold, treasuries, and US dollar, I think, is oversold right now. So continue to stay with those as kind of the core positions. From a longer term perspective, I think we're getting into that zone where we need to start thinking about what's happening in the Web3, to your point, like RKF and Block, and if you're into buying some of the Chinese telecom companies or IT companies like Alibaba and Tencent, these companies are quite attractive from a valuations perspective, but lots to do. I mean, I think over the next 0 to 3 months, there's going to be lots of opportunities, but not over trading right now.
Gotcha.
Yeah.
It was a pretty big week in the new issue market, though.
Yeah, a lot of activity. So that was interesting. That's a good point. We had quite a few companies come to market, with BMO being the biggest. BMO raised 2 billion in change, which was heavily oversubscribed. Lots of institutional interest in it. Northwest Healthcare came out. They raised money. Successful deal. Summit Industrial, which came out today, that traded well as well. Keyera did a bond offering yesterday that traded well. Lots of institutional demand on it. So yeah, it's a fair point. I mean, I guess the market has to some extent said, okay, maybe things are okay, and we're willing to come to market, and a bunch of companies have done so far this week, and I'd say that's a positive from a market perspective. So yeah, it was quite active in that space.
Okay, great. Yes, which in turn makes us quite active here at the office.
Sure.
Okay, so you got some charts for us, even though do you have charts from the road here?
Got charts from the road for sure.
Wow.
Let's see if we can get the charts here, and might just take me a second because I'm just working on one screen today. Oh, it says the host has disabled my screen sharing, so may need you to change that.
Okay, let me. That was not intentional.
Mm-hmm.
Just to make it co-host there. I think it should be good now.
Yeah, good to go. Yep. All right. There we go. We see him.
Yes, we do. The green one.
It's a green one. Oh. Can you see it? Okay. Yep. All right. Yeah. So this is an very interesting chart. Client sent through GavCal, so thank you for sending it along. GavCal's international investor, successful investor, but one of the few guys that spends a lot of time really on international markets and has a real deep focus on what's happening in China. So everything that he puts out is quite interesting. But this piece came across this week, and really he's kind of talking about what's happening to interest rates. And it's one of the I'd say questions / concerns that I spend a lot of time on. Is this current regime of central planners deciding that they're going to go back to kind of the 70s, 80s type of we're going to fight inflation no matter what? And so it's an interesting chart to look at. Rates went a lot higher as they tried to calm down CPI. And so right now we've been dealing with for decades negative real rates where inflation's higher than interest rates. And so if in fact there is a material change where the central planners want to work on getting back to real rates where bond rates are higher than inflation, then there is some upward pressure that I need to continue to pay attention to and focus on. I don't believe it's the case. I don't believe that the central banks are willing to do this, but it is something to continue to be cautious about and pay attention to, and it's worth thinking about and further discussion and time to pay attention on.
Okay, great.
Yeah. So this is Jim Bianco's research. He talks about rate increases. I find this to be a great chart and a great visual around what it looks like and what the market is presently pricing in. And so I talk about this often, just saying what's priced in already. And so if we look at the 1-year US bond right now, it's at 1.5%. And so this is presently where we are sitting at kind of the 0.25 to 0.5%. And so with the 1-year bond at 1.5, we essentially have 1 to 1.25 that's completely priced in. So the market has basically said we have 100% certainty that that's going to happen. And then the further out the spectrum you hear, you see obviously the percentage increases are decreasing. But it's still, the market is presently pricing in a lot of rate increases. And as you start to see some of the Goldman Sachs and JP Morgan, I mean, Jamie Dimon has historically been kind of the inverse correlator, where he would say rates are going to 5%, and that's kind of the peak of rates. And so they're all starting to talk about, rates are going to go to 4 or 5%. I don't think that's the case. We've already, which we talked about briefly before this call, was we already seen the damage it's starting to do to the housing market, and mortgage starts are slowing dramatically. And we talked about, from a simplistic perspective, what does it mean to people? So 3 weeks ago, we talked about, $3,600 more in energy costs as a result of oil prices being higher. And now we see on a $350,000 house, you get another $3,600 in increased expenses. And so you're looking at, $7,200 of pure housing and energy cost increases in North America. There is a certainty that this is putting pressure on the consumer, which we already know it's going to be a difficult second quarter without that. And so, I don't think this is at all possible unless they're willing to put the global economy into a severe recession. And so I continue to watch it, pay attention to it. But I think this is a good visual to look at it.
Yeah, very interesting numbers. I thought those numbers were amazing. Significant increases.
Yeah.
Yeah.
So, and then I always try to put a little bit of crypto, see what's happening in the world, as we've talked about NFTs. This is just from OpenSea's website. OpenSea is that place where you can trade these non-fungible tokens, these kind of digital art and music, and pretty much anything you want in NFT land trades on the on OpenSea. So it's like a publicly traded market, similar to stocks, but it's on this website called OpenSea. And so one of the most popular NFTs is the Bored Ape category. I know it sounds weird and strange, but why I put this up there is you got to think about the amount of actual dollars are trading in these things. And so over the last 90 days, the average sale price has been 97.1255 ETH. So that's worked out to be about 200,000 US. And so I just grabbed recently where we are today, what's happened in the last, 12 hours. So these are the 5 transactions that happened in the last 12 hours. And so you look at these things, 360,000, 340,000, even 9 hours ago, this thing traded at 400,000 US. It's really, probably, if this is the first time you're seeing it, it would probably blow your mind at what these are trading at. But these are real dollars, and almost all of these transactions are happening in ETH. So it's extremely interesting to pay attention to how quickly this is evolving, and we're trying to see what this is going to mean kind of longer term.
Right. I don't know. This might be a question for another day, because I think the answer will be long. But so if somebody was looking at this, they probably say, well, what am I getting? What am I investing in here? Right.
Yeah.
Like, these pictures of apes, like what am I investing in here?
Yeah. So definitely time for a longer conversation, but the kind of the Bored Ape category is kind of is taking on a life of its own. They've launched altcoins as well, where you can buy the individual coins, but it's kind of, your point is valid, that it is kind of a digital art, but just like physical art, and some people want to talk about what's the difference between the two of them. What makes the Mona Lisa the Mona Lisa? Well, the Mona Lisa was nothing until it was stolen. And then once it was stolen, there was this whole chase and art, and this kind of, it grabbed the front page of the newspaper for weeks and months as they, plotted it across Europe, and where it all of a sudden took on this life of its own, that the Mona Lisa was this amazing painting. But you could have bought it for $10 before there was this kind of mystique around it. it. And so similar to a lot of these NFT pieces, you know, they start to take on a life of their own as they become popular and more interesting and more rare, and similar to other types of collectibles. But yeah, we could certainly evolve on that on another conversation.
Sure. I think the difference between something like this, as far as the art pieces are concerned, you know, the size of this market compared to the physical art market would be thousands or millions of times bigger, right?
Yeah,
Like there's
yeah,
no restrictions. You know, you used to have to buy expensive pieces of art in art houses and Christie's and Sotheby's and stuff like that. Where here it's just
yeah,
open everybody, and you can buy fractional pieces of it too, right? It's not
sure.
like fractional ownership for some of these things
Yeah.
as well. So yeah.
Yeah, I think it probably becomes an alternative asset class as it evolves, as everything gets tokenized. You'll probably see ETFs that trade with this kind of alt category in them. So really early days, but a couple of things, like as I say, all of this trades in ETH, and so the kind of if you care about the infrastructure, everything's trading on Ethereum right now, and they seem to be by far the leader in this space. And so, you know, that gives it certainly a lot of credibility, and it's an important asset class, I believe, going forward.
Yeah, for sure. I think too, it's important to note, like, you know, you bring up a chart like this, and it seems for people who have been in around the investing world for a long time, I know we talk to our colleagues in the office, it's ridiculous to them. Like, cannot wrap their head around it. But that's exactly why we're spending so much time on it, is because it is just literally trillions of dollars going into, you know, this Web3 environment, whether it be the metaverse, whether it be cryptocurrency. You know, it's not, you know, is it a fad? We're way past that now, right? It's now understanding it and figuring out, you know, what's the best way, you know, to work with this, all these alternative assets, if that's what we're calling them, right?
Yeah, for sure. Sure.
Yeah. Okay, so what do we got? Is that it for the
that was it for the charts. Kept
Good
it
one.
3 again.
Good ones. Okay, so what do we got coming up for next week?
Yeah, so we wrap up March next week. So so this is a big day from an options expiration perspective today, and then we head into April next week. End of Q1, as I said, these are kind of probably the end of the good numbers coming out from the corporations. So as we get into Q2, you know, we have one of the most difficult Q2s of all time, because Q1 or Q2 of last year was the best of all time. And so I think a lot of GDP numbers, housing starts in both Canada and the US are going to be important to continue to watch on. Mortgage applications been slowing quickly in both spaces. And so Q1 earnings are going to start to come out in April. And so we'll continue to spend time on that. From a client perspective, we've been sending out tax documents. We're sending out the gain loss reports, the foreign property reports. So that'll continue. Again, and if you haven't gotten it and you need it urgently, please shoot us an email or give us a call and we'll send it right out. But we are working through the clients to send it out. If you need any clarification as well, certainly you can call Scott or Joy or myself, and we can help you with it.
For sure. Okay, well, I think that's it. You didn't want to talk about anything else before we get going? You can enjoy wherever it is that you are.
No, I think that's it. I mean, I think that it has, as we kind of wrap up Q1, it's been one of the more kind of difficult starts to the year from a place to hide. So, you know, taking time to say what's ahead of us, and that's always been the goal, is like trying to position the portfolio for what's ahead. And I think the portfolios have a lot of good potential for growth in Q2 based on how we've put it together, kind of wrapping up Q1. So I'm excited about what's ahead in Q2, and we'll continue to keep our eye focused on that.
Perfect. Okay, we'll wrap it up there. Thanks everybody, and have a great weekend.
Thanks. Take care.
Week.